We're in a new paradigm. This is crazy. This has never happened before to this degree in my entire lifetime. Which I guess isn't saying much because I haven't been around for a long time, but usually when I buy dividend stocks, I look at the overall company and maybe I'll take a look at the kind of products that it makes, the cash flow, the balance sheet, the fundamentals, the unimportant stuff. So say goodbye to qualitative and quantitative analysis and say hello to meme investing. What's crazy is that if you meme invest correctly, you could make a lot of money. Because remember, first we had GameStop, press F to pay respects for Robinhood. Then we had Dogecoin, pumped by the ultimate chief pumping officer, the ultimate internet troll, Elon Musk. And now we have the rise of cannabis stocks. So I'm not making this up, but check this out. My roommate Angelo texts me this screenshot of him buying a company called Sundial Growers at 79 cents a share. And he buys around 1,000 shares worth roughly $800. And I know that's not a ton of money, but very quickly that $800 becomes worth $3,500 at its peak just a day later, which is crazy because that's roughly a 340% growth rate. And just for reference, the stock market returns between 7 to 10% per year, and this is over 300% in like a day. So of course, that's having everybody pumped and super excited to finally get started with investing. So let me share with you my thoughts on how you can navigate this scenario so you can make some money for yourself and why you should also be very careful. Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay for the magical memes. So here's why cannabis stocks are super exciting. Right now, there are 11 states that have approved cannabis for recreational use versus 34 states that have approved it for medical use. And this is a really good thing because it creates that catalyst effect that I talk about, which is once this is overcome, those stock prices will just explode that much more. And so this is actually going to happen, whether it's 3 months from now or 3 years from now. It seems like it's inevitable at this point because states will not want to miss out on becoming a part of the estimated $73.6 billion industry that cannabis is expected to become in just a few short years. So as individual investors, if we play our cards right, there's a few opportunities to make some money. First, if you've been keeping up with Dogecoin and GameStop, I'm sure by now you've heard the famous subreddit community that is WallStreetBets, which I feel like at this point I'm mentioning inside of every one of my videos because that is how influential they have become. They now have over 8.9 million people inside of the community, and they have so much money in there, so much retail money, that it's almost like a hedge fund of its own that can influence stock prices. So if you can use this information responsibly, you can do pretty well. So let me share with you exactly how to strategically think about this so you can use this information to your advantage because it's pretty crazy. No, get that thing out of my face, please. Not right now. Hey. So that's basically the summary of what's going on. We went from buying GameStop in order to stick it to the man and stick it to the hedge funds to now being distracted by the new shiny toy, which is the cannabis industry. And the stocks in question are stocks like Afria, Sundial, Tilray, Village Farms International, Canopy Growth Corporation, and of course Kronos, just to name a few. And some of these stocks have grown by over 100% and some of them over 1,000% and have made people pretty rich. So if you want to participate in this craziness, it helps to be able to spot these trends before they happen. So if you want to be a part of that, here's what I would do. Number one, go to WallStreetBets or Twitter and try to see which memes you find, because believe it or not, these jokes are oftentimes exactly what determines which industry is going to get picked next as the next hot pick. And based on my research, the industry that I think we'll see this year get picked at some point is going to be psychedelics. This is just based on conversations that I've read about of people way smarter than myself talking about this, and one of those people actually happens to be Kevin O'Leary. So if he thinks that, then it must be true. Number two, pick a stock that has a memorable ticker symbol. Something like POTX, because that's easy to remember and most people are going to pick that one. If you can't find something memorable, the next step is to find something that is the cheapest one in the industry. That's because that's what people are going to pick as well. Even though a stock that's cheap has nothing to do with the reality of how cheap or expensive it is, it's just that's how people perceive a stock to be. Once they see a little number like 50 cents, they think it has the potential to go way higher, and that's what people buy. And step three, of course, is to profit. profit. And the way to profit is to basically sell the news. So there's a famous saying in investing that goes, buy the rumor and sell the news. So we're buying the rumor based on our Twitter and Reddit research with the memes, and then we sell once these companies drop the news of some collaboration or some partnership, or maybe their earnings report. And if you can do all of that before everyone else can, you're almost guaranteed to make a lot of money. But anyway, beyond just treating this like a meme, if you're gonna do this, there's a few more nuances that I'd like for you to know about. So let me share with you my strategic perspective on how I like to look at these stocks if I were a gambling sir. So here we go. The key is to think short term, because remember, long term, none of this stuff will ever matter, because in the long term, the companies that'll end up winning are companies with actual real world working products that people love buying with good management skills, and no amount of price manipulation by Reddit or any other community would ever change that. That is the reality. But we're not living in a reality, we're living in a simulation world, so let's make sense of the simulation, because there's 3 factors to consider. And number 1, if you wanna make money, you wanna follow these small cap rumors. The reason that these stocks are going to the moon right now is partly because of WallStreetBets, which again is acting as a group of almost private equity or hedge funds to buy up some of these shorted stocks or small market caps, which, in order for a company to be considered small market cap, it needs to have a total market cap of around a couple $100 million to no more than several billion, which I know sounds like a lot of money, but in the grand scheme of the stock market, that's actually a pretty small company. And you can just find them by going to Google and just doing a simple search like market cap of XYZ, or you can find it inside of your favorite brokerage app. It'll probably have it there too. If you're still not sure where to look, then check out the Russell 2000 index, which you can sort of think of as a box or a basket that has the requirement of only putting in stocks or companies that are considered small. Super random, but I promise it's gonna make sense in just a bit, and that's a great place to find that rumor of the day. Another one, of course, is FinTwit, or the financial side of Twitter, with hashtags like money, stonks, stocks, investing, meme, etc. Another great one is obviously Reddit, and those are great places to start to find the meme or the rumor of the day. The next thing you wanna do is, once you've found that investment, as it goes up in price, you wanna sell it off bit by bit. So instead of selling it right away all at once, you wanna sell a portion of it slowly as that price is going up in value to cover your initial principal investment. And after that, you can either withdraw the rest of it or just use it as play money. And that is called dollar cost averaging out of a stock instead of into a stock. Same idea. The second way to play this is actually by far my favorite method of all. It's so cool. So check this out. This water energy right here, I know it doesn't make sense, but go with me on this one. So check this out. 3, 2, fire. So was it really water to begin with, or was it fire all along? Either way, that was dumb, that was sleight of hand. The real method is the most powerful of all, which is pure basic human psychology. They did a study on this, and they found that stocks with a cool sounding ticker symbol are actually going to perform way better. So check this out. These are some of the stocks in my portfolio right now. I've got things like AbbVie, J&J, AFL, EMR, XOM, and the reality is that no one would ever pick those stocks totally at random. Now let's compare that to these. Check this out. We've got stocks like Cake, Cash, Baby, Bud, Love, Fun, Fizz, Pizza, Woof. Boom, that's another one. That's not even me making that up. So those stocks in comparison are going to get picked randomly because people associate those things like pizza with the pizza stock, even though that doesn't make any sense. And that's not just a film theory, because between 2006 and 2018, the study concluded that stocks with a cool sounding ticker symbol returned on average 13.22% per year, in comparison to the world market index of over 4,000 stocks, which returned only 4.9% during that same time period. There's also a third way of playing this that I'll get to in just a minute, but this second method, this concept is so powerful that I personally want to take it to a different level. So in the future, I want to make a video where I take something like $50,000 and then distribute it roughly equally into these randomly picked cool sounding ticker symbols that we can pick together that I'll call the meme folio. And then I want to compare it to my real form of investing, which is where I buy dividend or income producing cash flow stocks. And I know that's an extremely irresponsible way of investing. You should never do that. But for educational and entertainment purposes only, I feel like I owe it to you because it's only money that I have because you watch my YouTube videos. But anyway, there's also a third way of playing this whole scenario, which I didn't talk about before, which is this. Before I tell you what it is, just remember, I'm not a financial advisor. This is just for entertainment purposes only, but look into a stock. I can't believe I'm saying this out loud. Look into a stock called YOLO. YOLO, the stock you buy to convince yourself you're not a gambler, but you are. Yeah, like you only live once acronym, because YOLO is an ETF, which is an exchange traded fund. And ETFs are the best way to invest for 99% of people. People that aren't glued to their computers all day, people that aren't trying to find Fibonacci sequences and have access to level 2 trading. And if none of that made sense for you, then this is definitely for you. YOLO is the Advisor Shares Pure Cannabis ETF, and you can think of this as sort of like a proxy for owning the entire industry, because this YOLO ETF tracks companies that make at least 50% of their revenue through the cannabis industry. So it's almost like by owning this one stock, you own the entire industry. The only downside though is that the expense ratio is a very expensive 0.75% per year. That's almost 1%, and as far as ETFs go, that is relatively expensive, but almost all the ETFs I looked at in this industry start at 0.7%. Unless you find a cheaper one, definitely let me know, but that's the trade-off that you're getting. And I'm not saying that YOLO is the best ETF of all time, I'm just saying it sort of fits the psychological profile. But as far as my real thoughts on whether or not you should do this, the answer is yes, but no. First, like I said, we have entered a new era of investing that I've never seen before in my life. And sure, you could do what my friend Angelo did and end up doubling or tripling your money in the span of 1 or 2 days. But you can also end up betting your money
and it's gone. Poof.
So only invest what you're willing to lose. And speaking of investing, this is something I wish I had learned sooner, but I didn't. So if there's one thing you should take away from this video, let it be this. When it comes to investing, there's only 2 real methods. This first one is what people think investing is, and that's not it. This is called speculating. People think they can just put $1,000 of their own money and then multiply it to become a multi-millionaire in the span of a week, but 99.9% will fail at doing that, so don't be one of them. The other side of the people will think that they can just get rich slowly, and that's what you should do. But by the time people realize that, most of them will have lost the power of compound interest because they'll have spent tens of thousands of dollars and decades of their time trying to chase to become rich. Because remember, you have to be right 3 times. You have to be right on the stock itself, when to buy it, and you have to be right selling it. So you literally have to be right 3 times out of hundreds, if not thousands of stocks and choices to pick from. What are the odds that you're gonna be the 0.1%, that one person out of 1,000 people? Probably very low. So if you still watch this video and you're like, that's great advice, Andrei, but what do you think of Dogecoin? Is that going to the moon? Here's what I would tell you. Set aside a limit, maybe 5%, maybe 10% of what you make, and use it as play money. But whatever you do, set a limit, because don't let friends go to the casino without a limit. I know these things, I live in Las Vegas. And if your investment multiplies or quadruples in value, whatever it is, start to dollar cost average out of it until you have your initial principal investment, because the rest of whatever is left, even if you lose it, technically that is play money that wasn't yours to begin with. That is called taking profits, and it's an essential tool of the everyday successful investor. Remember Bitcoin when it went to $20,000 in 2017? My initial principal value of $20,000 went to $120,000, but I did not sell any of it.
'Cause I'm dumb. Don't be like me.
Even right now, I should probably sell off at least $100,000 to cover my initial principal value, but we're going to the moon and I'm no quitter. You see, it's hard to take your own advice even as I'm making this video, so I totally get it, I'm with you. But understand the difference between the irresponsible decision and the responsible one, and don't be upset when you end up losing money doing the irresponsible thing. The truth is, we all like to gamble and place some bets. My big bet is that I think the financial industry is gonna look very different 5 to 10 years from now, which is why I put in kind of a lot of money into that bet. I think the risk versus reward ratio is way higher on this bet, and the likelihood of success is way higher than putting this money into some random small market cap stock. So if you agree with me, then you can get up to $250 worth of free Bitcoin with BlockFi using this code below. And if you wanna get 2 free stocks with Webull, you can deposit $100 and you'll get 2 free stocks, 2 of which can be valued up to $1,850. And if you'd like to track those stonks, you can find the spreadsheet on my Patreon. Love you. Thank you so much for watching this video. I will see you back here on Monday and Friday, sometimes a Wednesday. I'll see you soon. Bye-bye.